All right, let's get into the detailed breakdown of how exactly to trade the 3-5A. I'm going to really take my time and go over all of the things I consider and think about, and then all of the added confluences that are things that I'm going to show you in here that obviously aren't public information. Okay, this is really what we're doing on the premium side to make sure that we have the extra conviction behind trades. And I'm also going to show you how we can blend the 3-5A into the CH1 so that we can basically use these two things as tandem tools to be able to add extra confluence, make sure we're taking the best setups, and be able to profit on these moves. Okay, so these systems go kind of hand in hand, the CH1 and the 3-5A. So I'm going to go over the rules. Feel free to screenshot this and keep this, in your notes to refer to when you're, getting used to taking these trades as sort of a checklist that you can do. This isn't going to make sense until I really start to show it on the chart, but just having this sort of baked into your mind and verbalizing it, I think is going to help to start. But first, before we even do any of that, I'm going to draw out what our objective is when we're trading a system like this. Okay, so I'm just going to use a little tool here and we can talk about it. All right, so say there's a trend that's trading up. Okay, so we have an overall uptrend, right? Then we have a move down, and we have this trend that's moving in a down direction here. So anytime we're getting a new downtrend or a new uptrend, we can look to trade the reversal by using Fibonacci levels that are going to give us reasons to believe that this price action is going to turn around. So the overall objective with trading 3-5As is to find a trend break, have a wave structure that we can use specific rules to be able to figure out where our wave 5 is going to be, and then we're going to be able to anticipate longing this B wave and taking profit on a C wave by studying structures in rules and fib projections, all sorts of crazy stuff on this trend, so that basically we can get long in here and take a profit in the up direction. Okay, this also works in the opposite direction. So if we're trying to short, actually a lot of the trades that I'm taking are shorts if we have, a downtrend and then we have a wave structure like this, wave 5 up to here. So it's a similar situation. We count our waves. Okay, we can look to actually get short on our B wave and trade it to the downside. And this is the overall general premise of the system, just to kind of get that baked into your mind before I'm going through the steps and showing you everything, okay? Step 1 is to find a trend break. I'm going to hop onto the chart and pull up an example on Solana on a 5-minute frequency here, and I'm just going to go over exactly what we're talking about with each step. So just to kind of cover this again, I would recommend keeping the 3-5As on anything from a 5-minute frequency up, okay? Going down to a 1-minute frequency can be challenging. I still do it. It's a little bit more advanced because it's just, you have to be more sure about things. You have to make sure you're trading the right pairs. But just from a beginner standpoint, usually the trades that we're taking is from a 5-minute all the way up to even a 4-hour or a daily. Okay, we can trade, we can use this for investing, we can use this for basically anything. Step 1, find a trend break. Okay, so when we're looking at price action, once we see, say we're up to this point, so say this is all we see on our chart, right? We can still identify multiple trend breaks going on in this situation. Okay, so back here, we have a downtrend here that was broken, retested, and now we have a new uptrend. And you can see these lows are giving us indication that this is a new uptrend. Okay, so we have an uptrend happening here, okay, off of these lows here, price action breaks it. Now we have a new downtrend, right? So now this is going to be our new downtrend. And this is where we want to start looking to take trades. So ultimately all we need is a trend break into either a down or an uptrend. Okay, so I'm going to be looking to trade the bottom of this as a reversal in the up direction. But in order for that, we need to have we need to be sure that this is going to be a new downtrend. Okay, so this is our trend break. We have ups, price action breaks down through it. Now we can start looking at this to trade it back up because this is considered a new downtrend. Step 2 is do a wave count as much as possible, which is subject to change. Now, what do I mean by do a wave count as much as possible? If we look at this trend, with the rules of Elliott wave that we previously learned, the low of 2 cannot pass the low of the 0 wave, or like the 1 wave. So where 0, 1, 2 is, 2 can't go past the beginning of the trend, and that would break a fundamental Elliott wave rule. So this means that this point right here is going to be the beginning of this new downtrend for our Elliott wave. So we need to constitute that. What I'm really looking for as far as our wave 1, and this wave 1 is so important. This is basically all we need to start setting up a potential 3-5A setup. All we need is a established low of a trend, a move, and then a corrective wave. Okay, so this even to me is a corrective wave. Now we might have to test a few ones. Maybe this turns out to, or this turns out to be one. Okay, it all depends. But as things start to come together and all of the technical analysis is lining up, it's going to give you an indication as to which one or which wave is actually your wave 1. Really what I need to do as my first step after finding a trend is finding our factor of 1. Okay, I always talk about this. This is going to be our factor of 1. So just the 0 to 1 distance is our factor of 1. So that's going to be what we need to do for step 2. Find as much as possible, and it's going to be subject to change. If I start my wave count, say this is my 1, 2, 3, 4, 5 is going to be somewhere down here. Okay, I really don't know you know, whether this is going to be the 5 wave or if this is still 1, 2, 3 until everything starts to come to fruition. So do as much as you can and start to anticipate where the waves could start to populate. Okay, step 3 is going to be use fib retracement from 1 to 0 for a deep or shallow retracement. Deep equals 261.8 or 361.8 for wave 5, and shallow is 161.8 level. What I will say about this is more applicable on the investing side. So anything in a larger time frame with maybe a 1 hour frequency, 4 hour frequency, daily frequency, this is something that tends to hold true. It's always good to have an idea of how deep your first retracement is to see, you know, typically the deeper this retracement of 2, the more extended the 5th wave is going to be, which means that, you know, if we have a shallow retracement here and the price action, you know, is looking really good at a 161.8 projection, maybe that's the top. But if we have a really deep retracement on 2 and we're looking at the 161.8 projection zone as our top of 5, we might want to double think that because typically that's going to lead us in a bad area. But always starting off, we can go into here, from here to here, and see how deep this wave 2 is retracing. Now, if we don't make it to 61.8, that's shallow. If we do make it to 61.8, that's a little bit more extended. Okay, so let's go to step 4. Fib projection off of 1 to find your 5 wave, which is going to be at the 161.8, 261.8, or 361.8. Okay, so the next thing, this is the bread and butter of the 3.5A, is going to be a tool called a trend-based fib extension. We're basically, once again, mathematically finding our factor of 1, and then we're shooting multiples of the fib ratio off of this factor of 1. And this is going to give us oftentimes the exact low of the 5 wave. Okay, so I can click to here, I can click to my 1 wave right here, and then back up. Okay, and I'm gonna put that 0 level once again on that. So I basically have found the distance between here, and now I have a projection zone for 161.8, which we've definitely gone through, right? 261.8, which is making nice contact already price action wise, and then projection 3, which considering the wave count so far, 1, 2, 3, 4, and then 5, since we've already hit 261.8 on 3, this is looking like it's already going to be our level, which is why I said not all the time is it required for this 2 wave to hit 61.8 or past it for us to get a 261.8 or 361.8. That was something that we were sort of dabbling in before, more on the investing side, like I said, but it's always a good idea to have a relative idea just in case. So now basically we're looking for price action to develop and come down to our 5th wave. See what happens to the price. All right, so something that I like to do too, because we can have volatility in sort of these candles on this 1 wave here, is I really like to have perfect contact at these important levels. So see how the price action breaks through and comes up to the 161.8, and then it comes down to 261.8. We kind of missed the perfect levels off of this. What I like to do is I like to adjust this until we get perfect responses off of this level. Okay, and so this is, it doesn't have to be perfect, it just has to be basically close enough for it to look like something is really making sense. So we got reactions off of here, reactions off of here. Okay, so as we play this forward, okay, we can see price action comes down and is now getting responses off of here and is basically responding perfectly to this bottom projection level here, and all of these levels are agreeing. So once we have a confirmation that we have hit something in one of our projection zones, right, with a proper wave structure, 1, 2, 3, 4, 5, this is where we want to have our ears perked. So normally what I'm doing is before it even gets to this point, say I'm at this stage still, I can start watching this trade because I'm like, okay, if it blows through it and it never turns around, it invalidates our concept. So if this were to just come through here and then do something like this, this is no longer a valid level. It's not going to give us an indication that this is going to flip around and provide a long opportunity for us. But if I set my alert here, and then we get something, boom, alerts triggered, and now we have the price trading back up. This is where my ears are perked up, and I'm like, okay, now we got to start setting up our trade and watching out for an opportunity here. So the next thing that I'm going to do once I get this level is I'm going to go ahead and set another alert level just past this high of 3 level. This is going to confirm that now we have a potential trend break and a new level that could move up. So I'm just going to go in here. I'm going to set an alert basically right at this 3 level, right? We'll see if it breaks it, and I'm going to set an alert there. So now if price trades up, contacts it again, I'm going to be notified. Okay, so once wave 5 makes a reaction and reversal off of or near the corresponding projection, wait for the corrective wave implied A to reach past the level of 3. And that's exactly what I'm doing here. So when I set my alert at this 3 level, what I'm waiting for is the price action to breach this level. So once it contacts here, I need it to break above the 3, because essentially, if we boil it down to what we're really, really looking to happen, okay, we have a trend like this. So normally what we want to see is something to really break this trend, because this is going to be the first point indicating a reversal. So when this trades back down, most of the time it's going to contact the outside of this trend and it's going to get legs and move to the upside. Okay, that's really what we're doing. We don't really need to draw that out. That's just conceptually what's happening. So I need this implied A wave, right, to crest this 3 level. Okay, so I can already go ahead and I'm going to click on my 5. Once I click this ABC tool, okay, here's my implied B that we're talking about, or excuse me, implied A. B is going to be our rough approximate entry level, and then C is going to be where we're looking to take profit. We're going to looking to long the B to C move. And so then once again, now I'm going to wait for that level to break. Okay, so right there, we have our price action break. Now we broke that level. This is confirmed A. So if we have a price action pull down, this is where we need to watch to be looking to take entries. So once A passes the 3 and starts to flip again, draw a trend line from 3 to A and close to the 5 wave. So what I mean by that is now we're going to take a parallel trend tool and we're going to start from this 3, go to A. Okay, this is mostly just notional to show you exactly the channel that we're looking to trade. This doesn't have anything to do really with the system other than kind of showing you visually what we're looking at, but this is just a good way. I always do this just to show myself like the channel that I'm really trading, right? So we go from 3 to A and then put it down to the 5, and that's where we get the 3, 5A from, right? That's the name of the system. So 3 to 5 to A, and then we're longing into B. We go to our next step. Take a fib retracement from 5 to A and set the entry a hair above or below, depending on if we're shorting or longing, the 0.618 with a stop loss slightly outside of the 5, and let the take profit for now be to be determined. Okay, so what do we mean by step 7? Once we get contact here and we get the price action to start to flip, this is where we need to be a little bit more hands-on with our trade. I'm going to grab a Fibonacci retracement tool, and I'm going to start from 5 here, and I'm going to click up to the high of this A, and then if this continues moving up, obviously we have to continue to move this up as well. But once we get this reversal confirmation, okay, we really need to be ready for this trade, and we're gonna look to long at this green level here, which is the 61.8, and you'll get used to just knowing which levels which, so you can keep your chart cleaner. That's why I barely have anything on my indicators, just because the less your brain has to look at during trades, the better off you're going to be. So the more you can just feel it and use the tools and know inside your mind, the more clear your vision is going to be without having all the numbers and sort of stuff clouding what you're looking at. Okay, but that's what we're going to do in step 7. So now we want to set our take profit level, which is going to be done with this tool here, long position. Entry is going to be a hair above 61.8, right? Because we don't want to miss it. We want to be able to get filled on this, even if it has a perfect response, which oftentimes it will respond perfectly to that level. Our stop loss is going to be placed a hair outside of this low here. You don't want to crowd it if it double bottoms, right? We want to give it some space to breathe, but put that just outside of your low of 5 or high of 5, depending on which side of the trade we're on. And then this take profit level is going to be determined based on the distance of how deep B actually goes. So we can't set a take profit level immediately as we're into a 3-5A. This is something that's going to happen after the fact. What I normally do is I'll look for the 1 level and the 4 level in this pocket here, and I'll just pick, you know, like the 161.8, or like later on in the system when I'm showing you, we're going to draw an inverted fib on the whole trend. And you can kind of see this zone of where something normally would retrace, and I'll just throw it up there and give myself, you know, a 1 to 3 risk reward, drop it in there, and we're good to go. Okay, so that's going to happen a little bit later, but this is going to be determined. The most important part is the entry and the stop when you're first getting into the trade. So now, once the B wave is confirmed and you are in the trade, take a fib projection off of A to B and look to set the take profit at either 161.8 or 261.8 of the A and B wave. Okay, we're going to get a little bit more into the details of how we're setting our profit target later once actually things start moving forward. So let's let this play forward. We have candle pushed down. We just touched our 61.8, so now we're in the trade, and now the candle is reversing and we're long. Next thing that we want to do once we're in the trade is we want to set another alert just above the A wave. Okay, so you make sure it's outside of the A wave, and I'm going to move this alert and alert myself once price action breaks that level. So see how it's just outside the high of that A? What we're going to do as soon as this breaks the high of A is we're going to reduce our risk to underneath the lower high of the B wave, right? So we're going to bring our stop loss basically to flat. So now we're not risking essentially anything on the trade as soon as we have this C wave confirming the break of A, and we can reduce risk on the trade. Okay, sometimes what's going to happen is this is going to come down like really, really low and then turn around. So in situations where that happens, as soon as we breach this level, we can still move our stop loss, but now it's just not going to drop the risk on the trade that much. But what we don't want to do is go inside and go, say, to here, so that this comes down and retests the same level and then goes full profit, but we're getting stopped out, right? We don't want to do that. We want to give it some breathing space, reduce our risk a little bit, even if that is the case. So just below the low of B right there is where we're going to move our stop loss. We're waiting on the confirmation break of A. Price action comes down a little bit more, comes back up. Okay, in this candle, this is where we have our break. So now we're reducing risk, right? Under there. Now we're letting the trade run. Now there's nothing on the table. There's no risk anymore. It's either we make full profit or we're good to go. Additionally, what's good about this is as soon as we have the price action break the A wave, we know that this was our B. If B came down, filled us on the trade, and then before breaking this high level here of A, makes a newer low, that's going to change the distance of our take profit, which is why we don't want to set our take profit on this trade, or we really can't until we breach this A, because that's going to let us know that this is a new move in the market, if that makes sense. So what we're going to do now is once we have that confirmation, we're going to take a Fibonacci projection. Once again, we're going to go with the fib projection. Okay, trend-based fib extension. We're going to click on the low of B up to the high of this A wave and then back down to that low of B. So for our profit target, we're now taking the distance between this A here. This is going to be our factor of 1 now, the distance between A and B, and we're going to shoot projections up into these zones. And that's going to be what we're looking to do for our profit target. Okay, so let's go into the next step. Okay, we look to take profit at the first projection level off of the AB that is past the 4 wave and will give you at least 1 to 3 risk reward. Okay, the minimum that we can get on these trades statistically that I shoot for is 1 to 3. Now, this is something that has been debatable for quite some time, that it's still open to interpretation. People have different ways of doing it. Recently, what I've found, and I normally just eyeball this and do what my instincts are, but we want to shoot for, at least in the beginning when you're learning this, is the first projection that passes wave 4 and gives you at least a 1 to 3 risk reward. So let's look at that. Let's actually look at the next part and then we'll compare the two. Okay, we also look at the fib retracement of the whole trend, okay, that we're trading to see if the macro 61.8, where usually trends retrace to the 61.8, and look for the 1 to 4 to see which AB projection level is closer to the mean of 1 and 4 and also the 61.8 of the overall trend. Like I said, this is subjective, right? So there's a few things we're looking at. We're looking at the distance between 1 and 4, because usually the trend is going to retrace into between 1 and 4. We're looking at the retracement of the overall trend. So if I'm clicking at the beginning of the trend and going down to the bottom of the trend, okay, this is going to be our 61.8 level. And then we're looking at which projection zone passes at least 4. Okay, you can always shoot for the 161.8. That's the safest angle to take. But a lot of times, like if we were to only shoot for this, for example, say we're shooting for there, we have our initial stop loss below this 5 here. We're going to get a 2.33 risk reward. Not quite 3 yet, so that's not going to be acceptable. Whereas if we do get a true retracement on a 3.5A, we usually are going to have either, the 61.8 of the overall trend broken or at least wave 4 broken, right? So in this situation, this isn't past wave 4 yet. This is something new that I've found. 161.8 is not past 4. Right, we don't have our solid risk reward. We can see the inverted 61.8 of the overall trend, the 261.8 projection, both fall between 1 and 4. So all of our criteria, the 1 and 4 zone, 61.8, and the 261.8 passing 4 are all making sense. So my profit target on this trade is going to be just underneath this 261.8 level, right? So now we're looking at a really massive risk reward off of our initial risk, which is going to be 3.77. So we're almost getting a 1 to 4. So if we risk $100 on this, we're making $400 if this trade goes right. Okay, so in this situation, we broke our A wave. We can reduce our risk down to here. So now we're risking nothing to make $400 on $100 of risk. Okay, now all we have to do is let this trade come to fruition. We're really not making any changes, or in the technical analysis, we're not modifying our trades at all. So you can see 161.8 was hit and responded off of, which is great. Price does come down a bit, and you might be thinking, oh man, it comes all the way down, and I'm scared, right? But as we can see, price action came up and blew through our level and allowed us to take full profit on this trade. Okay, so really being patient with this, making sure that you're focusing primarily on risk reduction and having all of this technical analysis come to fruition is really going to be the most important part of finding the best setups. And making sure that you're really, really taking all of these confluences seriously. Now, this is how we're trading this, specifically the 3.5As, but as I mentioned earlier, we can actually start to mix this in and use the CH1 fundamentals to be able to give us added confluence for when we can start to take 3.5As as well. Okay, so I'm going to show you exactly what I mean now. We're going to go over a short example, and I'm also going to show you, the extra confluences.